Hello traders, this is Ala Peters, founder of AlphaWaveTrader.com and Alphawave Trader Method. This is educational webinar about Alphawave Trader Method, where I will share with you what Alphawave Trader Method all about, and I look forward answering your questions with focus on Forex today. So please do remember, spend time reading US government required disclaimers and never ever trade with risks you cannot afford. So, what makes Alphawave Trader Method so different? In Alphawave Trader Method I use no software whatsoever. I use no indicators whatsoever. All the decisions based are on price action and key rules I developed. Price for entry and Fibonacci for exits. Because price and Fibonacci tells you far in advance what to expect in the market. For example, I know that most Forex traders love trading gold. If you review Alphawave Trader blog since 2014, you would see very clearly. Based on Alphawave Trader, the opportunity to buy gold had presented itself at 1148 level. Why? Because price told us so since 2013, that when bearish trend will come to reversal level, monitor for reversal. No levels had been touched since. And in a couple of minutes I will show you where gold is today, as gold is due for pullback. But again, buying opportunity on gold at the end of the bearish trend as spelled out by Alphawave Trader proprietary Fibonacci levels, specifically 1148. And I will go back to this screenshot a few times to remind you. Do not ever ignore the end of the minor trend. Decision point 1, where trend completely reversed from, staging initial powerful bullish impulse, and then collapsing, giving you powerful buying opportunity last week in November. So, everything preset in the price far in advance, and Fibonacci levels and the key 4 rules I developed tell you exactly where to buy, exactly where to sell, and when to stay out. So why in the world I do not believe in software and indicators? I used quite a few of them for many years, and I couldn't understand why, looking back on the chart, it looks so amazing and so powerful. But when you come to live markets, all the entries are very late. And more than anything, when you look on ranging or corrective markets, it is not a solution for happiness. When price tells you far in advance where to buy, where to sell, and where to get out. So for example, this is one of my favorite screenshots of all times that you can see posted in Fibonacci archives, and you can go back few years to see where students who know Alphawave Trader Method had been shorting euro from 3800 level. Again, no levels touched on euro since 2012. In 2012, bullish trend on euro spelled out where the reversal levels will be. And here is the reversal on euro from 3800. And where is euro now? Wait until I tell you where euro is heading next. Because finally, poor Americans will no longer be poor, traveling to St. Bart's in London, as euro heading into oblivion. The collapse is not over. It's only 30% in. So, that part is next, and I look forward to showing you where euro is heading, as well as pound dollar. So, let's take a look on moving averages crossover. Moving averages crossover are fabulous, magnificent, and magical 20% of the time. Why? Markets are trending only 20% of the time. 30 to 40% of the time markets are in consolidation and will never show you where to get out. Meaning, by the time you're entering long, markets reversing and vice versa. And that remains very challenging issue if you are using moving averages crossover. Again, 20% of the time it's fabulous, fantastic. 30 to 40% of the time markets in consolidation, and the other 40% of the time markets are ranging. Therefore, moving averages crossover will give you point of entry is still at that level. And that's the power of the price and power of Fibonacci. Can everybody else hear me, please? Hello, hello? Don't use any unnecessary variables. Recognize that price is the alphabet of the market. As long as you respect the inception of the trend, as long as you respect key rules, you can trade any instrument and any time frame. And that remains the key. So for example, I know that quite a few of you guys, Forex traders, had been hopefully short oil as euro. So here we go. That's where euro is heading to. Short from 3800 is not over yet. We expect a bullish correction at 1100. Key level to the downside is 1000. This will be the end of the minor trend. This is where a bullish rally to the upside will determine if the bearish trend will end here or not. This level is broken, euro is heading to 79.75. Next level, 4900. That is euro, all spelled out by the price since 2012. That's a short from 3800, still in a play. So pay attention to what I'm trying to show you about the importance of the end of the minor trend. Because this is something we witnessed today in my live trading room. In live trading room, I demonstrate the method on S&P and oil futures. This is where S&P reversed from. And if you were in my trading room, you would know what I said clearly for 3 hours. My bias is absolutely bullish. Based on Alphawave trader method, you do not short here. You short here. And that's what we expect on euro. So again, to the downside, euro is not far off from 1100. How sweet is it? From 3800. 1100, I expect a bullish bounce, but key level is 1000, where the end of the minor trend will show us if price is capable to continue further down. Based on the current structure on euro, euro will break through this level. I cannot tell you if it's gonna happen in the next 6 months or in the next 3 years, but I can tell you this will be the level where euro will be next. And euro spelled it out when it came to these levels, giving you this ultimate bearish structure, reminding you where to monitor for reversal, reminding you where the uptrend on euro struggled immensely. So the fight that bullish trend had to the upside in 2013 is exactly the struggle that euro will show when it will come to this level. Everything spelled out far in advance. So, Fibonacci is a key concept in Alphawave Trader method, and again we have completely open forum in Alphawave Trader course. We have multiple testimonies posted from our students. If you take a look on the website, Today we posted a brand new testimony from our Forex traders. Michael, who trades DAX. That remains the key. So I highly encourage you, if you click listen to our graduates, that update is being installed as we speak. As our graduates trade stocks, Forex, options, DAX, anything that has price has Alphawave trader method. And if you click on learn, brand new class started today, you can see very clearly that method applies to any instrument and any time frame. So, what makes Fibonacci levels so different and so unique? Fibonacci is a magic that found in the price action, the same magic that you see in everything that surrounds us, the same symmetry that you see in flower, the same symmetry that you see when you look in the mirror is found in price. It confirms that life is just a stage. It confirms that we only respect news due to volatility, as we constantly trade against the news if price overrides the news. And you can witness and take a look at live blog on the website, where I just pulled up the brand new testimony posted with Michael, our DAX trader. If you come to the website and you click on blog, that's where you can go back and review all the summary that includes euro and oil news, where last week it was extremely powerful, as we had extremely bearish news on oil. We had 50 times oversupply on oil, which was extremely bearish news. But we knew very clearly, as spelled out by Fibonacci levels since 2011, you don't wanna short into reversal zone. Since last week, we had a bullish rally on oil for 600 ticks, completely overriding any bearish news. Magic happens if price confirms the news, but if price overrides the news, we simply respect volatility. We never trade against the price, and we always respect volatility when it comes to the news. So, how is Fibonacci calculated in Alphawave trader method? This is the key numbers, and this is the only numbers I trade. This is by adding each and subsequent number. This is what creates golden ratio and the trend structure. And the key rules I developed that apply to your entry and stop using Fibonacci as targets remains the key. So here is Alphawave trader method, and this is what I was teaching earlier today. In the course you learn how to trade only the inception of the trend. In the course you learn to trade only wave 1, never wave 2, only inception of wave 3. Never ever will you enter at the end of wave 3. This is how I see the trend. I see trend as very clear and very simple. Major trend, 5 waves, which especially in Forex we're witnessing time and time again, as Forex is very powerful trending market. But you never ever want to trade counter trend. You want to remain trend trader. And for that reason, it is absolutely crucial to respect inception of the trend, wave 1, stay out if price is giving you counter trend, wave 2, and absolutely respect the inception of wave 3, as wave 3 will forever remain most powerful wave in the market structure. Even if trend is minor, you will always have wave 3. And if the trend is major, you will have wave 5. It's that simple. Price is not complicated. And that's precisely why gold started this bullish rally. 5 waves are ended at reversal zone on gold monthly, giving you buying opportunity on gold daily. We expecting complete pullback on gold monthly from the levels not touched on gold since 2012. This is pullback completely expected. And more powerful the pullback, more powerful the opportunity will be to buy on smaller time frames. And that will determine if gold will continue drastically higher up. But that's a picture perfect reminder, as you've been witnessing massive chop on gold this entire year, because gold is not far off from a reversal zone, finally staging this bullish push to the upside. So the pullback to the downside from this level on monthly remains the key. And that's exactly what used to buy at the inception of the trend. So this is an example of live markets that's showing you that's how price moves. No need to make it complicated. If you know what the correction is, you know how to separate powerful trend, getting rid of correction. That's what remains crucial when traders do not know what corrective markets are. Market remains that clear and that simple when major trend dances in 5 waves. When market goes into ranging or corrective structure, that's when difficulty starts. And as long as you know it's corrective and it's ranging, it's very important to walk away or to respect small targets. Trading markets, when it applies to pound yen, which I used to trade until I've started focusing on futures and again on private mentoring, I work with Forex traders, and about 20% of the students are Forex traders. Trading markets respect Fibonacci levels, just like ranging markets do, giving you much bigger targets. And this is a pattern that I spelled out earlier, and this is what we teach in the course. Alpha pattern, wave 3, will forever remain the key wave. And buying at the end of wave 3 will forever remain very dangerous as you entering into brick wall. The same exact dance price will do to the downside. Not a good idea to short at the end of wave 3. That's what happened on gold daily. When gold came to the end of the wave, not a good idea to short into reversal zone. It's a very good idea to monitor to buy, not to short into. But that's when your knowledge is tested. Do you know what separates correction from reversal? Key rules will identify that. So here's an example of a very small time frame on euro. 3-minute chart. 3-minute chart. Very powerful uptrend and very powerful reminder. Do not buy at the end of wave 3. Enjoy the rally at the inception of the trend wave 1. Stay out on wave 2. Buy at the inception of wave 3. You come to the markets at these levels, you walk away from computer. Stay out of corrections, monitor for reversal. So, in a nutshell, this is it. Oil will forever test you as oil extremely low liquidity instrument that give you very choppy and very corrective structure. Nevertheless, respecting Fibonacci levels. Here's the stock Google. A very clear and very beautifully defined classic major trend. Here the trader got just tiny bit lucky, buying at the end of wave 3. So here we go. This is the fundamentals of alpha wave trader method. All the trades taken based on price action. Key 4 rules. Method applies to any instrument and any time frame. The same rules you use on 1-minute chart, you would use on 60-minute, hourly, weekly, stocks, forex, and options. As long as you understand that risks are drastically different, and as long as you understand that that's what key determination to your trade position and to your account size. Alpha Wave Trader involves no software and no indicators of any kind. Students trade on MT4, TradeStation, Thinkorswim, Sierra Charts, Ninja Trader. Formula remains the same. Tomorrow morning you will receive an invitation from support team to come to Alpha Wave Trader live trading room, where I demonstrate the method using price for entry and Fibonacci for exits, giving you high probability entries, high probability targets, and showing you areas of inherent danger. And that forever will remain the key to Alpha Wave Trader method. So let me open up my Forex workspace, as I believe you would like to ask questions only about Forex. And let's take a look. Pretty please feel free to post major pairs, preferably major pairs and time frames you'd like me to take a look at. Euro yen for hour, marvelous. Love, love, love Euro yen. Euro yen was my favorite pair when I used to trade. So 1 second, let me pull it up. Euro yen for hour. Any other questions, pretty please? Post and I will get to your questions as soon as I can. First of all, I must tell you before I go to 4-hour chart, Mark, as again, if you're a trend trader, you have to respect where the price is currently, correct? So, this is where Euro yen is currently on daily. Just to show you Euro yen daily chart. So, I know. Yeah, I'm with you, Randy. So here we go. So again, Euro yen daily chart reached reversal zone. What is the key level to the upside and what do I think came and will happen next on Euro yen daily? Please pay attention. First, I would like to take you to reversal level 1. Very, very big difference. As I warned you earlier, when price comes to reversal zone, it will test you. Do you know what's the difference between correction? Euro yen gave you 3 days of correction, nevertheless pulling by about 100 pips. Correct? The same thing price had done here. Looks like for about 50 pips. And finally, this is where it's getting interesting. But let me warn you, this is not the time to buy Euro yen on daily chart. I expect pretty powerful pullback. This remains key level. 138.16, 138, price is not far off from that level. Monitor for a pullback. This is not the time to buy Euro yen on daily chart. This remains the key, and the power of the pullback will determine if price will continue further down. Clear? So, let's take a look on Euro yen for our chart. It is very clear and very beautiful structure. So again, I will completely encourage you to pay attention to the levels I just mentioned to you. And pay attention to what 4-hour chart is telling me. Remember, we were looking on daily chart, Mark, correct? Guess what? I don't even have to use Fibonacci levels. Price is showing very clearly. 4-hour chart, it's a reversal zone. So add the spread, and remember, it's a bullish trend exhaustion level. You will start seeing bearish corrections or bearish reversals, and that's when your knowledge will be tested. So please keep me posted. As you can see, my contact info in front of you, that remains the key. And again, everything I show you, I always tell you far in advance, as price cannot be more clear. The response at this level will remain the key. If price will give you bearish corrections or bearish reversals and will collapse further down, but only if rules are met, this would be the last buying opportunity on Euro-Yen. You do not acquire a position at these levels. In reversal zone, price will become very unpredictable. Clear? Absolutely no wave 2 anywhere on Euro-Yen 4-hour chart. There is no wave 2 on Euro-Yen currently. Euro heading into wave 4 as we speak. Wave 4 and wave 5. Based on Alphawave trader method, you have opportunity to buy Euro at 135 and a quarter. That's where we're buying Euro at inception of the bullish trend. And let me show you why. Since we're concentrating on 4-hour chart, because that was the reversal zone of the bearish trend, giving you very powerful buying opportunity. Clear? My pleasure. So, everything preset and priced far in advance. So please let me know if you have any other questions about any other forex pairs. And while you're thinking, I would like to take a look on something else. So, I would like to show you where bullish rally started on pound dollar in 2009. Is everybody clear on that? Price came to reversal zone in 2009, and in 2009 all the levels drawn since 2006, this is where pound dollar collapsed from. And guess what? This remains key level. I expect a bullish pullback on pound dollar for the next few months. Nothing spectacular and nothing powerful, but this level will remain the key. If we're not gonna see bullish reversal, we will see only bullish correction and expect complete collapse further down to drastically lower levels. This is what pound dollar is pointing to, 1100 as we speak. But since I'm just introducing you to Alphawave trader method one step at a time, monitor 4290. I know extremely well it will be only a correction, it will not be a reversal. Nevertheless, we'll see some sort of bullish action for a little while on pound dollar. And that's pound dollar monthly, nothing touched since 2007. Exact same thing you would use on 15-minute chart, 4-hour, 1 minute, 12-hour, 24-hour chart. Any other questions, traders? Please let me know. Also remember the level we're waiting for on euro, the 1000 level. Are you ready to see something interesting? That's where the collapse on dollar had ended, at the end of the minor trend. Minor trend will forever remain the most crucial level in the market structure, because we always have minor trend, we not always have major trend. But only your knowledge of the price and Fibonacci will tell you if there is a buying opportunity or it's only the end of the minor trend. And that's all there is. Pure price for entry and Fibonacci for exit. So I look forward to hearing from you. Tomorrow morning support will be sending you invitation to the trading room. Let me take a look and let me see if I can post it for you here right now. 1 second, please. So please monitor your inbox if you are interested to see live trading on S&P and oil. Here's the invitation for the next 2 days to my trading room, where I demonstrate the method on very small time frames. I'm always open to hear from you. And again, at any moment you can come to the website, click on contact, and you can see my email address and my phone number right on that page. If you'd like to join us on adventure of learning price and Fibonacci, click on learn, watch the video, read everything that explained in detail, and any questions, always feel free to contact me. The phone number is always here. Please do not subscribe to private mentoring without discussing it with me. So, thank you traders, thank you so much. Thank you Randy for coming. Marvelous to see you, Mr. Forex. As I wanted to show you the email, Randy just tell me without showing his email. So anyway, Dr. Randy. First trade doing well at decision point 1. See the chart. And that's the power of the price. Dollar yen with price is magic. Just confirming that life is just a stage. All you have to do, play by the rules. And if you had enough of indicators and software, I look forward to hearing from you. So thank you so much traders. Have a marvelous afternoon. If you'd like to see day trading on S&P and oil, look forward to seeing you in the trading room. Any other questions? Always feel free to email or call me. Look forward to speaking with you. Thank you so much. Have a beautiful afternoon. Thank you, doctor. Thank you so much. Marvelous to see you. Thank you, David. Thank you, Nuno. Thank you, Mark. Any questions? Always feel free to email. Take care, Swarner. Take care, Gus. Bye-bye.